Rally to ICE. Oil futures using a 5-minute time frame. So first thing we notice, a nice long trading range. We break ICE support and we rally back to ICE, this being our setup. However, we're going to dig deep and dissect this chart. First of all, we're going to pretend we're here at E and none of this exists. So we're going to focus and just analyze the trading range and the price action within it. And this is how I do it. First thing I do looking back is A. We have this extremely high volume on this bar. So the spread is similar size to the previous bar with that much volume. So therefore we know with all this extra force, yet the spread is the same, all that extra volume must be selling. It has to be selling, otherwise we'd have a spread this big. Okay, I'm not sure if you can see it. I had to scrunch the data up for the study, but both of the closes are there, so we can see that there's a clear ejection of the highs. And then the next thing from A, I would note we break over here. So I'd go to C and I'd look, no real volume. So if we can't break at A with this volume and we drift down and then we come back and revisit at C, odds favour that this will hold. Then as we rally back within the trading range, this we could class as an upthrust. So looking back at A, it has a climatic feel, but it isn't. The spread isn't wide enough and we don't have a trend holding the tooth. It's not established. However, due to the lack of upside follow through from A, with all this force, all this volume, we know that supply has overcome demand. It's swamped any buying that has occurred. Otherwise, higher prices would be made. Okay, it's completely logical. You can think of this bar in a sense with this fairly narrow spread for this volume as the opposite of bag holding, which is the end of a rising market bar. So with all that volume, the spread hasn't really changed. So for every buy order that's coming in, someone is selling. That's very clever bar. From C, as we come back within the trading range, I would notice this wide spread down bar with a surge in volume. So this is good quality selling. I would notice a little bounce here. Volume declines. No demand. We could draw in a local level here. Reject the highs, reject the highs. As we come down, volume increases a little. Then boom. We break to E with increasing volume, wide spreads closing weak. Again, this is a valid break. This is weak price action. Then I'd pay my attention to B. Well, all this tells me here is that demand is not emerging where it should. Demand is not emerging at support. If we analyse B quickly, we come here, we hold, get some good buying, we come straight down. We hold, we come down, we try to rally, we come straight down. And then we get this weak attempt for a rally to try and hold back over support. And again, we're met with some good selling. Look at all these selling bars. The selling here has ease of movement, agreed? Compared to the sloppy buying. That would be noted. And from the lows here, we do spring. And this does propel the market. Our attention now is from E. As we rally back to ICE, at F we have very low volume. With an upthrust type bar, we push up to reverse and close weak. And look at the rally on the way to F. Very low volume. This volume here is our volume that we need. Don't forget Wyckoff, equal or greater volume to break a previous area of support or resistance. And we're rallying back and trying to break with very poor volume at F and G. The market is kind and gives us 2 opportunities to enter. So we can short these bars. F is an upthrust and G is a test of the upthrust, which we will cover in depth in session 6. Okay. The important thing to note here is that we try to break ICE with lower volume than the break, which of course shouldn't occur, as we need greater or equal volume to break. And this price action terms is lovely. It's an upthrust followed by a test. Okay. So our story here for a trade, the rally back to ICE, is very good. We have huge hidden selling here. We weaken support here. We have an upthrust. Then when we trade back within the trading range, we're met with selling of good quality. And when we break, we do so with increase in volume and excellent price action. Then on the attempt to rally, we rally with low volume and we try to break with low volume with excellent price action characteristics. So we can take this trade here very comfortably. Everything is in sync. This is a high odds trade. I would ask, but are there any questions for this chart? High volume after G, does that concern you? High volume. Okay, well spotted. Yes, this is high volume and this is an up bar, very similar to this bar over here, before this bar over here. These bars act like a gut check. So this bar here with this high volume acts like a gut check. Oil loves to keep you on the edge of your seat, and it will test you, or definitely test me more so than other markets. And that's just a trait of its personality. All instruments have their individual subtleties, and the way they work and the way the price unfolds and tests are different. Okay, they all come in different flavors. But the important thing is, don't forget that this one bar with this with this high volume does not negate all of this price action, the past 300 bars of all our analysis and our story of weakness. Okay, think logically about this bar with this volume. What am I going to say? What does this bar accomplish with all this force? Absolutely nothing. It doesn't test resistance. It doesn't break resistance. It does nothing. It's just a rogue bar. So for that very reason, in my eyes, I would suspect, as that closed, that this bar would be suspect. Don't get me wrong. It would be noted. And if we carry on like this, then yes, we have to get out. Our analysis is incorrect, or the market has other ideas, or perhaps some fundamentals came into play which will drive the market higher. But it doesn't. We can see that from this rogue bar, boom, it heads straight down. This little trade here nets 90 ticks per contract, $900. Very, very good little trade. Excellent question. In essence, just be mindful. Always ask yourself, what does this high volume bar accomplish? And here, absolutely nothing. Doesn't dip under this little low, doesn't test any structure to the upside. It's just a rogue bar for whatever reason. For whatever reason, we don't know. Okay? Don't let one bar scare out of your analysis and your trade. We have all this weakness behind us. Excellent question.